There is life changing money and there is life changing.
Kiger, one of those.
Okay. Hi, Shara. It's
Hi.
it's great to be doing this. Honestly, I'm
Yes.
super excited. Uh, Honestly, it's the first time I'm doing something like this, right?
Yeah, me too.
So thanks to you for being there and for being there for our first episode. In fact,
Thank you.
I think I'd just take a moment to maybe tell you about, although we have discussed this, but tell you about what the long shot is all about, why I'm
Yes.
doing this, right? So I think we'll start with that. So I think in general, I really love underdog stories, right? I think there is something very inspiring about doing something which no one is expecting you to do. So I think, and I've been consuming a lot of content lately, like podcasts, business podcasts, personal ones, reading a lot of books as well. So I just thought that maybe it's time for me to now start producing something, and maybe in the same way that I have got inspired by some of this content, trying to inspire other people as well, and trying to inspire them specifically to like take a long shot at something in life, right? Because I believe I have taken some of those, maybe not as long as I would like to take now, but I think even this podcast could be a long shot for me.
Absolutely.
So that's what this is all about. I think my like audience would be anyone who is wants to take that long shot about something. It could be professional, personal, but is hesitant to do so, and probably could be inspired by learning more about people who've already done that. I'd maybe quickly give a introduction for you and how I know you. I think we know each other since almost 3 years now, a little over 3 years. So so you're from Turkey, of course, based in India since almost forever now.
Yeah.
It's been over 10 years now for you in India, and you worked on an India-focused product, which is the Renault Kiger. You work with Renault currently, and you're a product manager there. Before that, you worked with other global auto companies like BMW, Mini, and currently with Renault. To be very honest, the reason why I sort of thought that you should be the first person I called to this podcast is because I think you're one of the most passionate people I know. And when I say passionate, it could be across the different wide range of topics that we have discussed, be it, let's say, investing, which we would like to explore more, music in general, etc. So I think that's the reason for you to be here.
Yeah. Thank you, man. Thank you for having me. It's great to be the first guest for you. I'm very happy that you're doing this. Like you said, we've been long friends, and I'm very happy that you're taking this initiative.
Charan, I wanted to start with a couple of questions before we go deeper into your investing journey, how you started, and what you would like to tell people more about. I think my first question, which relates to the podcast itself, is what's your long shot in life?
Okay. So, I mean, this is maybe going to sound a little pretentious, but do you know this word, eudaimonia?
Tell me more.
So this is a I am really, one of the things I'm really into is philosophy. Okay, and there is this word that Greek philosophers defined called eudaimonia. Okay, so there is no exact English translation. It is something between happiness, fulfillment, and wisdom, right? So Aristotle defined life as the object of life is to reach a state of eudaimonia, right? Okay. So this is for me like if you're talking financially is different, but if you're talking generally in life, for me the long shot is to reach a state of eudaimonia.
Okay, and how do you think that? How do you think you'd be able to do that?
Yeah, I think it's many things, right? Like it's philosophy, psychology, it's curiosity, like all these topics that I have interest in. Investing is one of them, music is another one of them. Then, longevity is one topic I'm into. So many things, but it is a philosophy that I follow of curiosity. Then a strong family, friendship, like a strong base in life. And then wisdom, right? Like how to deal with life, how to deal with the human condition, existential reality of life, the money, the marriage, etc. So all this put together, the aim is to reach to a state where you feel fulfilled and happy, and you have enough wisdom to tackle whatever life throws. Of course, it's a very difficult and a long pursuit, but these are the things I feel it helps that you get to that place. And that if I have to set one goal, long shot goal for me, that is to reach that.
Okay, I'm definitely reading more about this.
Yeah, you should. Actually, it's pretty good. Yeah.
Okay, great. So I have a sort of a follow-up question, right? And this is one question which I've sort of shamelessly I'm stealing from another podcaster that I really like. He's Aviral Bhatnagar. He's a VC now, and he's been sort of blogging. He's been putting posts on LinkedIn. He's really big on LinkedIn as well. So the question is that what is one thing that you believe to be true, but most of the world disagrees with you?
Okay. So, I mean, off the top of my head, recently it's AI. How AI will change the world, and now people are catching up. Like I've been, even your head, I've been chewing for the past 2-3 years about this, as you know. So I don't think people still really understand how much this will affect everything. It is basically a lot of things we do in life is a form of scarcity of knowledge, right? Like why do we get paid at work? Why do you pay a lawyer? Why do you hire a driver, right? Like it's all scarcity of knowledge, that these people have some knowledge that people are willing to pay for, etc. And this with AI becomes almost zero. Like there is no cost to it. And that will change life in a way that I don't think people really understand. And for the first time, we are not going to be the top of the intelligence chain of the intelligence tree of the world, right? I gotta say. So, and that has huge implications. That, like more the question is like a lot of people asking the question, what will AI do? Like, what the real question is, what will we do at the age of AI? So, yeah, that is one thing that for a long time, I've been talking about it day in, day out, researching. And when I used to go to people and it was like, okay, it's just some app, like it doesn't really matter that much. But then now I think even the public is coming to realize how big this is going to be. And especially the rate this is happening is crazy, right? Like it's like it used to be 79 IQ, around 90 IQ last year. This year, it's like 157. And this is going to be 300 next year, which is smarter than any human that ever lived, etc. And when you graph that exponential chart, it is like in 5-6 years, you're going to reach super intelligence, right? And then after...
And what does that mean? That people want to know what implication does it? So let's say, let me put it this way, right? So we are doing this podcast. We have this setup, and we have our phones recording this podcast, and then we'll do the editing, etc. So everyone is starting to realize the basics, right? Probably in the context of this podcast, let's say editing would become easier, right? Or maybe handling your audio would become easier, or maybe now there are tools through which you can actually just clone yourself, right? We don't have to be sitting here doing this podcast. We create our clones and they do the podcast. But what next? Like what more? When does it get scary?
Okay, I'll tell you. So for example, let's take your podcast as an example, right? Like what you started to do. So for the past 20 years or whatever, I would say 20 years, the biggest revolution is the digital revolution, right? Like that every company, like your Googles and Microsoft, then your influencers, podcast, all the opportunities has been online, right? Like even brick and mortar companies, they moved online, the website, Amazon, all those things. So this in an AI age becomes nothing. Because suppose you have an amazing podcast, or suppose you have an amazing, online presence. I can just tell my AI to copy I like Shrey's website, make me a similar website, and then in 3 minutes, I have the same website. And in fact, he will tell me, okay, this market is undersaturated, why don't you want to go there, etc. So it is going to be podcast. Why do people watch a podcast? Generally, they want to be informed, right? But in an age where the information has no cost, like, so for example, you're hosting me thinking I have some insights about the topic, right? And the viewers are listening, we are trying to explore this. But then in the age of AI, this information be available for nothing, right? So then only thing that is remaining, because this thing is silicon, it's unbelievably good at imitating it as emotion, okay? But it actually doesn't. This is another thing people don't understand, because it's very difficult. Like when it speaks the way it speaks, when it makes jokes to you, when it uses emotional language, people don't understand that, like people of course know, but it's just not in our nature when something sounds like that, not to project some emotional reality into it. But this thing has no emotion. So the only thing that will remain in an age of AI is a human element, right? Like things, if you find a job that is emotionally based, right? Like for example, take sales, right? Those things still will remain, because like if I have a product complaint, I don't want to speak to a robot, right? Like I want somebody on the other phone that can understand me, what I'm feeling, right? Like can empathize with me, not like imitate empathizing with me, actually empathize with me. Those are the only jobs. Any other job or any other thing that is not that is purely intelligence based or knowledge based, or even with the robots coming out today, Amazon is employing more robots than which is one of the biggest employers of the world. So with the robotics coming, that will also go. So I think only thing will remain will be this emotional coefficient.
So you're saying sales is safe?
Sales is safe.
Just to be sure.
Maybe like, yeah, even the podcast. If people are coming to your podcast because they like you, right? Then that will still be there. Like, okay, I like to listen to Shrey because I like this guy. I want to hear his opinion. So that will remain. But then the knowledge, pure knowledge you are giving, right? That will be available for like almost nothing. That is the point. And that changes everything. Like that puts you in an age where, you know, like the productivity explodes. In investment, we will probably touch upon that also. But like the product, like the GDP growth in an AI age can be like, you can double a country's GDP in 1 year. You know, like we are right now at like 1.72%, 4% GDP growth. This can go like double in a year, right? Because it's like infinite employees that cost zero with like 300 IQ, right? So the productivity you can unleash. This partially is seen in ChatGPT, OpenAI, for example, like how OpenAI has been able to, you know, compete with Google and these giant companies with hundreds of thousands of employees with the resources that they have. Then a small company with like, you know, very limited number of employees can compete with that. I think we are beginning to see the, you know, examples of that. And I have a suspicion that, you know, some part of their speed comes from because AI is developing part of these AI, right? Like so. And right now the cap is that still you need human engineers to develop the AI, right? Like so that is where the hard cap is right now. Like that's the graph goes up, and that is where you're stuck. That still a human needs to develop this. Once this thing can develop other AIs, then it goes like, okay, then it goes like, you know, it keeps improving itself at a rate where it's like we cannot match it.
Interesting. So I think let's get a little deeper into investment, trading, your investing journey, right? Because and I think why I want to discuss this is because lately I've been feeling that there's a huge, like all of us are in decent jobs, right? We are sort of doing well. There's a huge strata within the Indian upper middle class that is, you know, really doing well in life right now. People are even coming back from abroad, want to work in India. There's growth, everything, but there's still this feeling that a lot of us want to do something additionally, right? It could be like doing a podcast. It could be some sort of a side hustle, as they call it. Right? So I want to understand why investing as a side hustle versus the other 10, 20, 30 options we may have. That is one. And second, I would like to know, like, how did your journey start? Because from what I know, from what we discussed, like you were trading crypto when no one knew crypto, right? So just getting a bit into the start of the journey.
Yeah, sure. So this is a very, very important question, I feel, and you are very right. And the main reason for that is that we have been kind of sold a false promise. Okay, so what has happened financially, because you get an increment of say 10%, but then the house prices double, right? Like, or go 30%. And then all the other assets increase, like now you can afford a little bit less of the Nifty, right? Like versus last year, if you bought last year, you could have bought more shares in Nifty. Now you can get less shares in it. You bought the house last year, you would be able to afford it better than this year, which is not how it's supposed to be, right? Like it's supposed to be, when I'm working hard, next year I should be I should be able to afford more. So this feeling has gone away. So of course, like everyone, I was feeling this, and I was researching like, okay, what is happening? But then when you approach investment and financial markets, there is a huge, cladding around it that is very technical, right? And it is like all these jargons and, you know, like CPI, PPI, all those things. Is it the US narrative? Is it the company's own narrative? Do I follow the earnings? Do I follow the inflation data? Which is what will make it? And then, of course, the technical aspect of the charts, etc. And of course, you hear a lot of horror stories as well. So I think everybody is feeling that, you know, I need to do something. And everybody knows they need to be invested. Like just letting your money sit in the bank is not good enough, right? When you have like 8% inflation and the bank is giving you 6%, this is not even covering that, right? Like, so that is not good enough. But then people have hesitation around what they heard, that this intimidation around this financial reality, etc. So I also went through this, and I am a person that likes to get into topics, really research it, understand it in, you know, huge detail. That's part of my job as a product manager as well, to, you know, kind of form a big picture understanding around the topic, right? So, and once I start getting to investment, I have quickly started realizing that there has to be like a code to this. Okay, like this cannot be this complicated that I have to follow 10 different companies' earnings, and then after I have to follow all the narratives around you know, crypto, and then which project will fire, and deal with all that FOMO and panic and anxiety. This need to have some way it operates in a sense of logic, okay? And it's just that I need to understand it enough to figure that out, right? Like this was my initial thought. And generally, as a person, I like everybody's not like this. Like some people like to get to directly to the practical aspects of it, etc. But believe me, if you understand the full picture, like even beginning from how money works, like what is the, you know, how money operates, how that markets move around the world, etc. I have always been that type of person. Like I want to understand something like in deep detail, okay? And so then I started getting into, you know, how does money work? How does monetary system work? What is inflation? What is debasement? All those things. What is these currencies movements? International reserve, like money of the world is dollars. So what is happening in US, etc., etc. So when I got into it, I have quickly started to see a pattern. Okay, so this, to my suspicion, was correct, that there was a pattern to this. And that pattern, I think a lot of people don't know about. I think you need to understand debasement. I think that this is the most important word, that what has happened to us, our generation, and why now you feel like this, why investing is the solution. You can understand all this if you understand the context of what is currency debasement and what has happened to our generation in the context of that. So to explain that little bit, so if you go back to our parents, right, like that generation, and even to a degree our parents, right, the idea was you get a university diploma and your life is more or less sorted, right? Like you get a job, right?
I think we were the last of those.
Yeah. That is where people feel it, right? Like this is where the debasement factor comes in. They didn't have currency debasement. Like we have currency debasement that is happening at a massive scale in our generation, since I would say like since 80s, around 75 till 80s. And you feel this. I'll give you the most blatant example of that. If you see how the wages have grown, right, versus how the house prices have grown, right? So there you realize, okay, the salaries are more or less, okay, remaining same, right, in view of inflation, etc. But then the house prices, asset prices, in fact, gold prices, the stock market prices, everything else is going up at a massive scale, right? But your wage isn't. So if you are this type of person that says, okay, I did what my parents, you know, instigated in me, I did all the right choices, I finished a good university, I did an MBA, now I'm working very hard at my job, I'm trying to progress in my career, but then you look around, you're poorer every year, right? And that is the big picture that is missing in this equation, okay? So around 2008 crash, this intensified very strongly, that real estate bubble happened in US. But even before, the trend is governments need to spend a lot of money. Okay, so governments, and if this money expenditure of the government is in line with the GDP growth, right? Then it's okay. So that means you are spending the money in the right places to grow the country, right? So if your GDP increases 5% and the government increases the money supply by 5% or borrows money by 5%, then that is fine. But what has happened is the GDP growth is say 2%, 3%, but the money supply is increasing 10%, 20%. Okay, and that has been initiated by a lot of borrowing, a lot of, for example, COVID was the last example, and we all went through the inflation episode, etc. So what happens when government needs money? There are 2-3 ways you can do it. Okay, one is to tax people, right? But if you tax people, it's a very politically unpopular thing to do, right? And all the taxes around the world, like Europe, everything is at their limit, right? It was 30%, 40%. Now it's like you're going to take half of what I make, right? So that is reached this limit. That got saturated. Then the second option is to borrow, right? But even that is saturated. Now US is more or less, I think, if I'm not wrong, sitting around like 120% GDP to debt ratio, right? So think of it like a human being. GDP is how much money you bring in the house, and debt is like how much you owe, right? Like if that is more than what you make, then there is a problem. So that also got saturated. And for other countries, it's much, much worse, right? So that got saturated. And now the only option remained was to either crash all the markets and everything and let this thing go down and let all the assets get real estate sector collapses and S&P collapses and Nifty collapses and we come to ground zero and then we start building again. But of course, this is also politically unbelievably unattractive to do, right? Like you cannot get re-elected like this, right? So this is where they discovered, okay, the easiest and the most painless way of doing this is to print, right? Like just print money. But what happens when you print money? And this is why I said, if a person understands like kind of the big picture of it, then you know how the markets move, right? So they decide to print money. And the moment you print money, it's like kind of think of it like an invisible tax, right? Like, so what is in your pocket, because the GDP increases 4%, but the money supply increases 40%, now your money is getting less in your pocket, okay? But then all this money printed doesn't help the GDP grow, doesn't end up in your pocket. Like most of the times, the things government do, like the public don't directly benefit, or some section of the public directly benefit, but then all of the public pays the price for that, right? So it's not like you get this direct benefit, but then after whatever you already had has been debased, right? Like that. This is what currency
the value is sort of
value has
lower now.
And all this extra money supply ends up in all the assets, all the markets. Okay, so the S&P goes up, and NASDAQ goes up, and the real estate prices go up, etc. Okay, so this makes this the most crucial aspect of differentiation. If you are not financially educated, right? Like if you don't understand this system, you are like, I did my university, I go to work, I work like a donkey, I am trying to get my promotion, right? But then all the assets increase versus the currency and versus what money you make, right? Like versus your wage. So then you go like, okay, each year I am a little bit worse. Like I could have afford a house better last year. Now I can't afford it. I could have bought more shares in Nifty. Now I can't do it. So this is in a nutshell what debasement is. And once you understand this, that the governments have to print money, like they have no option to print money, because every 4 years, you must have noticed crypto, be it US market, it always follow this election and 4-year cycles, right? The 4-year cycle, the main reason for that is they have to roll their debt every 4 years. Okay, like so US owes a lot of debt, right? For example, other countries owe a lot of debt, and every 4 years they have to pay the interest and push. They cannot close the debt. They don't. That's crazy. Nobody has that money, right? They need to roll the debt over, and that is where, even if they don't want to print, and even if it's not incentivized to print, even if printing causes inflation, they reach a place where they have no option. They have to print, and that is where all the markets go up, right? So
why is it happening more now? Is it because it's accumulating across the years?
Yes, it is with COVID, the money supply has increased immensely around the world. Okay, like so before COVID, I think around the world the debt to GDP ratio was around 60%. It's just something like that. Now we are talking about 100%, above 100 for most countries, 90%, right? So, excuse me. So they printed a lot of money, and that obviously resulted in inflation. Now, in order to combat inflation, we had this 2 years of, we are raising interest rates and trying to bring this down. But now, again, you reached a place where the debt has to grow. So you have to go back to print. And the market knows this. So that's why the market has been climbing for the past 2 years. So, and this is what I feel is, kind of the core, principle. Like if you understand this, that the market is not driven by earnings, but not by, Cardano, crypto's narrative around technology, none of this. It is 4-year cycles of liquidity, and that is where we are. And this liquidity used to be, like, once again, if you go back 20 years, when the governments print money, it was to enhance productivity, right? Now it's like I am printing money to cover my debt. So it's like I am getting a credit card to cover one other bank's credit card, right? Like, so this is the stage. So even they are not at control, right, at this point. So that's why when I first understood the financial system, like I start getting into all this, you get extremely pessimistic. Right? Like you become a perma bear, they say. Okay, like this.
There's a sense of loss of control, right?
Yeah.
Whatever fundamental analysis I do about a company, ultimately it's how much money governments print, which I can't control. So then very interesting, Chandra. Firstly, thanks for. I think what I take away from this is that if, as a new investor, and most of us I would call as new investors only till the time we don't really dive into it, have to know about the macro before getting into a particular company, a particular cryptocurrency, or any form of asset, right? That's what I'm getting from you. So that's very interesting. I think what I want to go to next is trading versus investing, right? And when I say investing, I typically mean it in the longer term.
Yeah.
So I read a book called Coffee Can Investing. I'm not sure if you read it. It's by Saurabh Mukherjee. He's a well-known author now, and what he says is that if you sort of put in your monies in, let's say 10, 15, whatever number of fundamentally very good companies, and then just forget about it, then he says coffee can basically means, like, I don't know, this has some example, like in earlier days there were people used to save their money in coffee cans and keep them below their whatever beds, and that money would be the safest asset they own. So I think that's the principle. But then when I speak to you, you tell me that you 5x'd your investments in the last 1 year.
Yeah.
So that is where the confusion begins for, let's say, people like us, right? Wherein India was just sort of waking up to the stock market. Let's say over the last 5 years, what companies like Zerodha or Grow have been able to do is get millions of people into the stock market, right?
Yeah.
Versus what they were doing earlier, as per their parents' advice, was to invest in gold or fixed deposits, or let's say real estate, which was real estate still, I think, is the biggest sort of investment class in India. We were just entering the stock markets, and now we sort of are beginning to realize that we are losers even if we sort of win in the stock markets, because now this new thing has come up where a Trump coin can probably 2x your money in a day. So what's that all about, and what's your perspective in terms of trading versus investing?
So, like, you're very rightful in that people are moving down the risk curve. Okay, so like in our parents' generation, investment was a world of, okay, give me some money now and you have a great retirement. And government incentives even today. Like if you hold something 5 years, you get some. So this was kind of the narrative of investment, because your salary was enough, right? Like the house you want to buy was 3x your yearly salary. Like your wife didn't work, you had 3 kids, and one person's salary was able to maintain that household, etc. But now, because of debasement, now this is not enough. Now people want to have kids, they struggle with financial security. They want to buy a house, they struggle with financial security, etc. So what happens in that environment is people move down the risk curve, right? Like now either bonds 5% don't cut it for me. Now I want to go to stocks. Okay, stocks also 20% don't cut it for me. Now I want to go to crypto. Crypto 100 100 doesn't cut it for me. Then you go into altcoins where you get like 5x, 10x. So there is a general trend of moving down the risk curve. But for me, it was like, it was a very simple notion of, okay, now I know that I need to invest because, like I said, financially educated person benefits from this asset rise with the printing, right? Whereas I don't get this benefit and I'm getting the effects of the debasement. But then what to invest, right? For me, like it was a very simple equation. I looked at what I need to make, right? And I made like a simple calculation, like, okay, if say inflation is 6-7% a year, then after you have debasement, which is like say 10-15%, right? Like debasement can be any other asset. But if you make an average of, okay, how much the house prices go up, how much Nifty goes up in a year, how much all these other assets go up in a year versus the currency, how much we lose versus dollar in the Forex, etc. If you put all these together, you probably get around 10-15% loss like that also. And then this is only offset by the idea of you making some increment in the company, right? Like which is generally for people at an average 10%, best case, most times it's less than that. So this doesn't cut it. So I need something at least to give me north of 20%, 30%, right? Like, so this is the bare minimum.
Which in stocks is very tough.
Yeah. This is the bare minimum. Then I looked at what assets give this, right? Like, so you go to bonds, it's like 6%, 5%. US bonds are like, 4%, doesn't cut it. Then you look at gold, okay, gives you 10-20%. Okay, it's been on the rise. Sometimes it's cyclical, but still for me, it was like, it didn't cut it. It's old technology. Like, I mean, it's an old asset, it's physical, etc. So I did not feel familiar. So then thirdly, you look at S&P US as the, and US is very important. This is something also we should touch upon because dollar is the money of the world, and whatever we do, even if we are in India, you track Nifty rise and falls with US stock market, right? Like, so because they control the dollar, they control the global economy. So I looked at US, and S&P 500 gives you around 13-14% a year. If you go to NASDAQ, which is more tech stock, you get around 20% a year, right? So for me, there is this ETF. Then I said, okay, QQQ is there, which is more tech companies, right? The Magnificent Seven primarily that is there. That gives you around 30-35% a year. Then you go to crypto, that is like even with the rise and falls, right? Like even with the 70% drops and everything, it is around the average of 115% a year what Bitcoin gives you. Like not the entire crypto sector, Bitcoin gives you, which is technically the best asset in the world that has ever happened. Like at this rate of increase.
Is that what's the last 10-year annualized return of Bitcoin?
So it's I think I don't know the exact number, but it went from literally cents to $100,000. So I mean, it is unbelievable. Like it's the biggest gold rush in entire human history, but it does it in a very volatile manner, right? And hence people have a lot of fear around it. People have a lot of bad stories around it, etc. Which does happen, which is what we can also talk about later, like how not to mess up. Right? Like, okay, we need to invest, what to invest, and then after how not to mess that up. Because there's so many ways you can mess that up. Okay, like especially with trading, stock market, you can mess that up in many ways.
So I had a follow-up question, right? So when sort of just to get closure on this investment versus trading mindset, long-term versus trading. So let's say you mentioned that crypto went from a few cents to 100K, right? So then what I want to understand, what a lot of folks would want to understand is that then was it wiser to sort of put in some money when it was worth a few cents and then forget about it and then probably sell it right now when it's at 100K and Trump got elected and all of that, versus someone who wants to trade it every week or every day or every month? Because in the second case, I think 99% people would have ended up making lesser money than the people who would have invested. So that's what I really want to get.
So for me, like between trading and investing, etc. So like I said, this thing, once you understand the code, which is like debasement and liquidity, like the markets follow liquidity. Okay, once you understand this, then you first start looking at the chart of liquidity and the cycles of liquidity. And just like crypto, rest of the markets follows the same 4-year cycles. Okay, so I fully agree with you. Like, it is, first of all, invest, and then if you can trade or do these things. I also have for example, full day job, so I am not looking at the charts all day. I do something called swing trading, which is only when a major shift in the market happens, I'll go in, I'll go out, take some profits, etc. But like, I don't do day trading. But first, the most basic is follow this 4-year cycles, right? Which is 3 years you are going up, and then 1 year you are coming down. So right now, for example, this is the 3rd year of crypto where we really probably gonna see very high numbers, etc. And then next year gonna be a bear market. Now in this cycle might start a little early. I think it's already too high to, I don't want this to sound like financial advice that go into crypto tomorrow, because it used to be 15,000, right? Like, that was the time to buy. Like, now it's at 100,000. You have to understand, like, that there's been a huge money made already, right? Like, this is not gonna now run another 5x right from here. But the point is, when the bear markets happen globally, right, or when the pullbacks happen, you should be making your investment thesis and you should be deploying capital. Okay, so, and that for me is US tech, AI. Okay, this is next 10 years thing for me, maybe 20 years, 30 years. This is one trend that I want to ride, and crypto is another tech product I believe in very strongly. That's a trend I like to ride. But understand this 4-year cycles, invest in the bear markets, and when you are very profitable, take some profit out. Okay, so that's another thing. But when you get into trading, and why people mess up in general, it's all emotion. Okay, so like the markets, like how much ever we talk technically, and the narrative is like inflation, for example, etc. Markets are driven by emotion. Like, stocks go up and down based on emotion. Okay? And your trading is also gonna be based on emotion. It's anybody that wants to understand the technical side of it, wants to study Elliott wave theory, etc., which I've done, this was much easier for me. Okay, so when I started investing, to understand the technical reality of the chart, this you can do maybe in 2 months. If you dedicate your time, you will understand the technicals. There are channels dedicated for that they give you the update of the technicals, okay, like on a daily basis. This is not the hard part. The hard part is the emotional part of it, okay? To understand portfolio management, to understand your own emotions, what you will be able to live with, what you will not be able to live with, right? Like, how much loss can I handle? Or how much gain, where is the point I FOMO, right?
So in terms of portfolio management, do you sort of have when you allocate, right, do you have a percentage that you would allocate to, let's say, long term versus what you keep aside for trading, swing trading?
Absolutely. So, but that is what I'm saying. That is based on my emotional state. That's
okay. What is it for
say.
you?
So, like, how much I can handle. So what I do is I keep a core portfolio, and then I trade around that portfolio. Okay, so like, suppose your budget, let's assume, is $50,000, or let's say something less. Let's say $10,000. I would keep 5,000 always in. Okay, and the rest of the 5,000 I will trade around it.
So related to this, right? So when you talk about psychology and how important is psychology and emotions in, let's say, investing or trading, what we've sort of heard a lot about crypto versus stocks, and as like a maybe as a criticism of crypto, is that when you trade or invest in stocks, there is some sort of underlying principal value to it, right? There's a company, there are employees, there is revenue that is getting generated. So there's this underlying security in the minds of an investor that it will all not, like, it can't go to zero tomorrow, right? Probably it still can though, but the probability is pretty low. Whereas in crypto, the criticism is that, like, the question in fact is, what is the underlying value? And maybe that is what makes the psychology of a crypto trader very different from the psychology of a stock investor. And that is what I want to probably get at. So
yeah, sure. So like, I don't think the psychology is different, honestly. Like, I'll tell you, trading is trading. Charts are charts. It's same. Like, for me, for example, trading in S&P 500 and crypto is no different. Okay, the only difference is you are further down the risk curve, right? Like, and this is also part of the portfolio management. Like, don't put everything onto the altcoins, right? Like you put bulk of your money in US stocks, like you said, Google, Nasdaq, etc. Then when you come to the crypto space, you put like some portion of it, like maybe whatever you allocated for crypto should be less than what you allocated for US market. And then after in crypto, 60-70% of your money should be in Bitcoin, Ethereum, Solana, like these big things, which are
Like blue chips.
And then we are all human, so take some risk as well also. Okay, like don't make it super safe as well. So 10% of your portfolio, whatever you use, then start going into a little bit into things where it's gonna go 50x, 10x, 20x, etc. That you need to do. One of the mistakes people do is they're like, okay, alt season is coming, I'll put everything in there. And then after, of course, altcoins are extremely volatile and like very much like you said, they can go to zero.
Yeah.
I don't believe Bitcoin will go to zero. I believe in the technology. I don't think Ethereum will go to zero. I believe in the tech product and the notions of it. We can talk about it if you want. But the point is, altcoins might go to zero. And altcoins is not something you can hold in the bear market, right? Like you can hold Bitcoin, like even with a 70% loss. Last bull market top was like 70,000, right? Today we are seeing 100,000. So even if you are that guy that bought it at like 70,000, you still made money if you had the patience and the emotional maturity to hold it, right? But the point is, alts can go to zero. So that is what you need to understand. Then coming to like crypto as a product, right? Like, so I believe in this. I strongly believe in this. I think this is gonna go to 500,000, maybe a million eventually. Okay. The reason I believe in this, I view it like a tech product. Okay, and I view Bitcoin and the rest of the market as two separate things. Okay, so Bitcoin for me is, like I said, when you understand the financial markets, you kind of become scared. Okay, because you can see there is a debt bubble. You see, like, even we are taking one credit card to cover the one credit card. Even US is in that state, etc. Once you see these things, this printing is a must, right? So is there a need in the system for a product that is outside all this, right, as a store of value, which is what Bitcoin trying to be? I strongly believe in this. Okay, it is the digital form of cash, digital form of gold, I would say. And this is, in my analysis of the financial understanding and how the financial systems operate, this has a place for sure. This is what I believe in. So this is Bitcoin. The others, like everything outside this, like Ethereum onwards, etc., then you are investing in Web 3.0. It's like a tech product, right? Like, for example, AI, do you believe in AI? Right? Like, I believe in AI. I believe this is going to have a huge thing. I invest in it. The rest of the crypto sector is that. Do you believe in that technology? And that technology of Web 3.0, decentralized blockchain, dApps, decentralized apps, etc., that problems that it solves, like the smart contract, etc., I believe in that. I believe that has a place in the world, and that is a technology that is required, and hence I invest in that as well.
Okay, Charles. So tell me, I think there's a huge fear, right? Like I mentioned, because there is no underlying value, honestly. It's mostly psychology, or like you mentioned, it's as a result of some certain macro factors that is happening. There are losses, right? So what's the biggest loss you faced? Like, where do you think you've sort of, you wanted to stop doing it?
Yeah. So there are multiple answers. So last year, there was a phase around March where in one day I made nearly $6,000, and then I lost $5,000. And it's basically like this entire week was like around that lines, and it was one of the toughest weeks I had in trading. But the most I ever lost, that was, I mean, the potential gains. If you talk about potential gains, of course, like in 2017,
that's the psychology.
Yeah, 2017, I was early adopter of crypto, but like I had zero investment understanding, zero trading understanding, zero technical analysis. I just looked at crypto. I understand the underlying concept of what problem it solves and what it stands for, etc. It made a lot of sense to me.
Okay, so like what year was this? When
2017.
When you got into this?
Yeah. So like I knew nothing of investment. I knew nothing of trading. I just looked at crypto and the underlying, the technology behind blockchain and what problem it solves, etc. Decentralization, etc. So it made a lot of sense to me. Okay, and I knew this was going to be big, but like I said, I had no experience. And we were all just coming up in life. Okay, like we didn't have a lot of money. Also, nothing we had. So I had this idea of putting everything into crypto. Okay. So this is like
in 2017.
Yeah. Investor mistake number one, right? So like I did that, and that time I think 1 lakh was the price for one Bitcoin.
Rupees.
Okay. So 1 lakh rupees was one Bitcoin was 1 lakh rupees.
Okay.
Right? So, and I had 11 Bitcoins. Okay.
You had 11 Bitcoins.
11 Bitcoins
in 2017.
Yes.
So do you still have them?
No.
I hope so.
No. So that if
you had 11 Bitcoins and you sold them.
I had 11 Bitcoins. I sold it. I told to one of my friends this recently, and he was like, I would have hanged myself if this happened to me. But like, I didn't have the emotional maturity, right? Like that's what I was explaining. So you need to, like I said, it is not just a technical understanding, it's the emotional maturity and even the risk profile. Like you put money you can lose comfortably. You don't put everything you have into crypto and expect to be okay when you go down 70%. China banned it, India banned it. Okay, it was a very dark time it happened, the full bear market, like some 70-80%.
So do you think if you would have put in, let's say, 3 lakhs for 3 Bitcoins, you would have kept them?
Yes. And that is one of the learnings. So that you invest what you are emotionally comfortable with, because otherwise emotion will make you make a mistake. Even though, for example, my investment thesis was right, that this will become, 100,000, whatever it is today.
Which it did.
Which makes like some $1 million.
How sorry do you feel for your wife, honestly?
Yeah. So, but she was very supportive, honestly, surprisingly.
So what other options?
Like put everything into crypto and then lose half of it, and she was like, okay, it's money doesn't matter. So I am very.
She still supports you?
Yeah, she still supports me, and I have amply recovered that. But like the point is, of course, if I held on, it was $1 million right now. So but there is a learning in that. That's how I console myself. That the learning is that you need to know how to manage emotion. Okay, technical understanding, seeing that AI is gonna be big before everybody else. That's not enough. You need to have this. You need to understand this craft of trading.
But tell me, at that point, right? When it was falling, it was a new asset, relatively much newer asset class. Yeah. How could you have known? Like it's not all about psychology then, right? Like because if we look at it retrospectively, it of course seems like a huge mistake, a blunder. Yeah. But then at that point in 2017, where people were even hesitant to invest in stocks, probably, you sort of buy 11 Bitcoins and to sell it at that point was a okay decision.
So, like that time, China was like 60-70% of crypto was happening in China, and China banned it. Okay, so then consecutively India banned it, where I was in India, and we had this huge drop, and I was like, okay, I think this is where this story ends. Like that was my fear, and I was in an emotional state. But what I should have done probably was to look at the need, like this what problem it solves, like just like any technology. Okay, what is this problem this technology is solving, and is there a need for this in the world? And then after, should have put what I am comfortable to lose and forget about it, right? Like that would have been the right way to do it.
You could have kept 3 Bitcoins at least.
Yeah. Consequently, my wife said that.
Well, portfolio management.
I'll tell you, when we even sold, she was like, oh, keep one at least. Okay, like keep one. Okay, whatever it is, keep one, leave it. We already lost half of it, keep one in it. But like, that's another thing on trading psychology is that like when you suffer losses, you need to step away. Like you cannot be trading the next day.
Yeah.
Okay, so I was in this emotional state. I want nothing to do with it. That's why I didn't enter the next bull market also. Like I was burned so heavily that I didn't enter the next bull market. Then the following bull market I entered. Yeah. Like there's been 4 cycles now. But the point is, it's all a learning. Like, I don't think there is a shortcut answer where a trader has never lost money, right? Like this, there is no trader, according to me, like at least that I know of, all the people I follow, etc. They have wiped their accounts multiple times till they become profitable, right? So investing you can, right? Like investing in secure assets, etc. With the money you can lose, to keep it and forget it, like that example you mentioned, the coffee, what was it?
The coffee can investing.
Yeah, the coffee can investing. That you can always do, but like then the portfolio matters. You cannot put everything and be like coffee can, right? Like, because that coffee can is like now 70% less. You are sitting there like, that's
I
not,
don't have money to buy coffee now.
It puts you in an emotional state. So you should be cognizant of these things. That's the only learning that I have. And it is never 100% assurity, right? Like if you are, as a trader, winning 7 trades out of 10 trades, right? Like you are doing well.
Yeah.
So you are okay. And once again, I like to mention, I don't do like daily trading. Okay. So I just do swing trading, which is that keep a core portfolio as like the investment. Then, every time the market, changes direction, because the trading happens in trends. So that's why bull market, bear market, etc. Like big trends. Then there are within the bull market smaller trends, right? So I just trade these daily charts. So I don't look at the hourly chart, minutely chart. Sometimes I look at it to get an entry, but like basically 1 month it will go up, and then 1 week it will come down. So I will ride that 1 month. I'll sell. I'll wait for 1-2 weeks for it to do the right correction, and then I'll enter again. This is the type of trading I do, and this is the type of trading people working can do, I believe.
Yeah. I think that's the important bit, because what we started was with discussing about side hustles, right? So we don't want to lose our jobs.
We don't want to lose our jobs.
But I think another very important question that I want to ask you, Caglar, is that you've had a very interesting background, right? Out of all the people I know, so I believe that our whole perspective in life is built by the people we know, and the wider we are able to sort of expand our scope in that sense, the better perspective of life we get. So I think you probably are one of those people who helped me widen my scope from that perspective. So you've had a very interesting background. You're from Turkey. You went to the UK for your masters, right? That's where you met your wife, who is also my friend. And from there, you guys shifted to India. You worked in India. You sort of, being a Turkish national, studied in the UK. You built an India first car, which was the Renault Kiger, which you're the product manager of. So overall, I'm sure in terms of shaping up your psyche, how your background, how your childhood was, I'm sure it would have been very different from how we grew up in India, right? So has your background, has your psyche impacted your trading psychology, and how has that journey been?
Yeah, absolutely. So of course it does. So like I said, it is a emotional mastery is what is required, right? Because market puts you in a state of FOMO and panic. Okay, like these are the two dominant emotions that fear and greed index, you must have heard about it. So it's like, and this can happen, believe me, at a minute base. Okay, like you can open a minute chart, and within matter of 10 minutes you can go from, oh, I am rich, to like, oh, I lost everything. Okay, so this is the level of emotional turmoil is there in the markets, and that is why it becomes more important than the technical side of things.
That doesn't happen though in stocks, right? That's why I asked the question around psychology.
No, in stocks as well. It's stocks as well. So if you get into futures, right? Like if you start taking leverage, it's the same. So it is the same.
So let's say when you talk about macro, right? Why I sort of asked this question, especially from you coming from Turkey, right? Is coming from Turkey a reason that you're so into macro? Because Turkey has been like, of course, we know how what the economic journey has been for the last 2 decades, right? So was that at the back of your mind that I have to study macro to be able to invest better?
Yeah. So that is crazy. When you go to Turkey, and like Turkey is like actually 100% inflation. Like they're dealing with 120, like they are living in crypto land. Okay, so like people are buying cars, like first-hand cars, and then they are selling it 6 months later for like higher profit, etc. This is the state it has reached. So when you go to Turkey, everybody talks about this finance. Okay, like you have kids talking about
I think
finance.
I think in Turkey, the only option they have is crypto.
Yeah,
because
they are-
all the other assets
Yeah,
are
yeah.
anyways they can't beat inflation otherwise, right?
Yeah. So the people I have heard of so many crazy stories how people trying to survive and trying to beat inflation, like people putting everything to get 3-4 houses in their name and like some money left, I will buy a motorcycle. That also has like it's
So
crazy.
what do they
over
do?
there.
Like what are people doing there to invest to sort of beat inflation? Because otherwise it's very tough, right?
Yeah, so like what do you do? Like what is inflation, right? Like the asset prices and the goods and service prices go up drastically, and the cash what you have, like the liquid capital that you have, loses purchasing power. So in that environment, you cannot be on liquid portfolio. So what people have done, and there was a time where, of course, the government also doesn't say exactly what the inflation is. Okay, like they select these goods in the basket where it is showing the inflation to be like say 60%, but actually when you go out and the things you buy is like 120%, right? So because of that, the bank interest rates were low versus inflation. So what a lot of people have done is, okay, I can't be on cash, right? For sure, because half the purchasing power next year. I need to buy something, but I don't have money. So what people have done is they went to the banks. They got like loans on like 30% interest, etc. They bought houses and all these assets, which went up like twice, 3x, 4x. So there's like a real estate bubble that is happening right now over there. So that's how people survive.
So are people in Turkey investing more? Would we have that data? Are they investing more in crypto versus other countries?
It's huge in Turkey because they have to kind of, right? Like that is the only asset, real estate bubbled, and then after crypto. These are two things that are Turkish people are heavily investing in. So you go to the airport, you see these giant, exchange advertisings, etc. It's huge in Turkey. It's huge.
Okay, so like in terms of trading, right? What I've heard the most is that no one can predict the market, no one can time the market. You have your psychology, you have your charts, you have your indicators, but ultimately the success rates are so low that it's like sometimes people, and a lot of people may feel this, right? I might as well bet on horses, right? So,
yeah.
So
is it gambling?
Because if it's a known fact that 90% of traders fail, right?
Okay, it's a very fair question, and a lot of people ask it. Like according to me, and it is true. Like you are right in that nobody can for sure tell you the market will go up or down, right? Like if somebody knew that, they'll be a trillionaire anyway. But the point is, what trading and the investment allows you is to take calculated risks, right? Like it gives you better odds than a casino will give you. Okay, so if you go to the blackjack, for example, whatever, or if you go to any other thing, I can guarantee you the odds you will get will be like 50-50. That will be the best case the casino will give you, right? But like when
maybe 51-49. The house
exactly.
Wins.
House always wins, right? Like so you won't get this also nobody knows, this also nobody knows, but they won't give you a great odds. Now when Bitcoin is 15,000, for example, right? Like that's where I bought for example. Now when Bitcoin is 15,000, what is my downside risk? Okay, like unless this goes to zero, which is very unlikely because now it's been 4 cycles and more the adoption is increasing. Like you need to see the trend. So this goes to 10,000, I lost 5,000, right? Like at 15,000, I lost 50%. If it goes to 10,000, I lost 33%. But then the upside was, 100,000, 150,000, etc.
But
right?
how do you know that upside, right? In stocks, you have ways to sort of
based on the previous patterns, right? Like so, 4-year cycle so far has always repeated. It has repeated.
It's been 4 years. The cycle is repeating.
Yeah, so 4-year bull market, bear market cycles. It's been, I think, this is our 5th cycle, right? Like so, 4 times we already did this, right? Like 3 years go up, 1 year come down. 3 years go up, 1 year come down. So now we are at the bottom of the bottom. Right, like so, there is a very likelihood that this might repeat if history is any indication of what will happen in terms of probability. So then, what happens is my downside risk is like 33%. My upside gain is like 5x. Right, Which casino will give you that? Casino won't give you that, right? Like no odds in casino will be like 33%, at 33% risk of your portfolio, I give you 10x, right? If there is such a thing, the odds of it happening will be like very low, very low. Like 1% chance you will get that thing to give you that level of gains. So the only difference is, like one of the main differences, if you understand risk to reward ratio in trading, you get great risk to reward ratio. And that is why probably now is not the right time to invest in crypto, right? Like, because now you're at 100,000. Okay, upside is 150.
But that's what happens, right? You're telling me about like when it touched 100K, people coming up to you talking about should we invest now? And
that in fact is like most cases it's a sign to exit, honestly. Like when like, because when I was buying, I was still talking to people like around 15,000 when FTX crash happened. I was telling people, please buy. Like I was telling people, please buy. And the response I used to get was like, this thing is over, it's gone to zero. But that is exactly why you are getting it cheap, right?
That was a long shot.
Yeah, that was a long shot that worked out very well. But now it's at 100,000. Everybody in the office is asking me like, okay, can I invest now? And I'm like,
you have to sell.
Yeah, I am like, this is a sign that, the market is topping. Like if everybody is coming and asking, this is the exact time to exit actually. And these people, unfortunately, most cases end up holding the bags for another year of bear market, etc. And that's why the bad reputation happens, right?
Yeah.
But with crypto, you never know. This I'll also say. Like I believe the market will top around 130, 140, around that. This cycle will top. But crypto always surprises to the upside. Like I wouldn't be surprised that Trump does a strategic reverse. We go to reserve and then we go to 250,000, etc. This we don't know. But it used to be 15,000, right? Like so you cannot.
When was this 15K?
15,000 was 2 years back. So that is where the bear market ended. Okay. Now we are in the third year of the bear market. Like I said, it goes up 3 years, comes down 1 year, right? But it doesn't feel like that. Because the first 2 years of going up, it goes up slowly, right? Like it bottoms and then slowly goes up, and then towards the end it peaks, and that is where all these altcoins, meme coins, NFTs, and this euphoria phase happens. And then 1 year it dumps, and it is also not that bad that it dumps for 1 year. Okay, like this is another thing. Like for example, recently, from the point Trump got elected, right? Like Trump won the election, all markets went up. Okay, but now recently we gave away, with the Fed saying that okay, I will do less rate cuts next year, right? We gave away all the profits. Whereas Bitcoin went from 53,000 to 100,000. Okay, and then we are at like 90,000 right now. So whereas S&P, like supposed to be less volatile, right? Like supposed to be more safe, etc. Everything you made from the Trump election, we are back to where it started. Okay, like we gave away all the gains. Whereas crypto, we went like 50,000, 100,000, we are back to 90,000. We just did this small dip.
Yeah.
And then again, we are going up, right? Like, so because it doesn't correct when it's supposed to correct, as per other markets, it has this phase where it massively corrects, right? Like it's supposed to correct, it doesn't correct, it goes up. And then it has to catch back up with the other markets. So it has this 1 year of bear market. So let me ask you something. Okay. So what is the things that stop you from investing? Like be it crypto, be it other places, where do you, because I see this trend, I feel you are like a little hesitant, or like a lot of people are in this situation where they heard bad things. They are like, yes, I know it is good, and a lot of people made money, but a lot of people lost money. There is all this confusion around it. So what is it that stops you, for example?
Yeah, see, so I think I have no sort of, my portfolio doesn't have crypto at all, honestly. And there's FOMO for sure, knowing that you had 11 Bitcoins at some point of time, you are 5xing your investment and whatnot. But I think, let me call these out, right? So I think the first one would be the question that I asked you as well, right? I just feel that there's no underlying value probably, or there's no underlying value that I understand as of now. That makes me a bit uncomfortable, because I'm like, if I'm sort of putting money in, let's say, whatever, let's say an Apple or a Microsoft stock, right? I know what Microsoft does. I know they make these certain products that people all over the world like, and they've been doing it since over 2 decades now, and like there are faces to it, right?
Yeah.
That's an important part.
That is an important part.
So
you
that's
know
one.
that. Okay. So do you know this thing called fart coin? Do you know
Yeah.
this?
So meme coins, by the way, are
know
like
this?
something which.
So
I'll tell you one funny story. Okay, I have invested in crypto
okay.
only once, right?
Yeah.
This was way back when Dogecoin became popular, and I got in at Dogecoin's peak, and then you know what happened, and I think that was it for me, honestly. Probably a stupid decision
No, but
on
what
mine
is
as
that?
well.
If you think about it, like this example I gave, fart coin, okay? This thing did 8,000% since November, okay? So something called fart coin. Even I did not invest in it because like fart coin, really seriously, like is it okay?
It's called fart coin.
It's called fart coin, okay? It did 8,000% since November. Okay, so that's like 80x, right?
Okay.
So it's like then you get philosophical.
So are we idiots, Charlie?
No, I don't know that, but I this is where I get philosophical, right? Like, what does it say when somebody in 2-3 months can make more money than a doctor can make in a lifetime, lawyer can make in a lifetime in something called a fart coin, right? Like this is maybe the society speaking.
That is exactly what stops me, honestly.
Yeah. So, but then then the other way to look at it, like that NFT thing, then the meme coin thing, and etc. You know what it is?
Yeah, NFTs failed badly, right? So what was that?
But it made a lot of money before it failed, right? Like, so these things are always trends, right? Like, so rises and then falls. Obviously, fart coin will not survive like the next 30 years, right? But then a lot of people got rich. So the point is, it is attention. There, what you are betting on is the culture of attention. Okay, so basically, if you're buying fart coin, what bet you are placing, it is not that the asset has any value, technology, product, etc. None of that. You are saying for the next 2 months, the dominant meme will be, whatever meme that you like, right? This will be the main attention of the people. That's the bet you are placing. Okay. And if you call it right, then you make a lot of money. If you don't call it right,
that's
then you
gambling
lose a lot
at least. Then
I mean,
that's like you betting on whether it would probably, I don't know, rain or not.
I think it is like, it is betting on attention basically. Like you just saying that of all these 1,000 meme coins, okay, the funniest name is this one, and this is where this one will people's focus and attention, the YouTube videos, everything will be around this. So I want to buy that attention and I want to profit from that attention on this thing. Okay, that was the story of Dogecoin. That's the story of NFTs. That is the story of your fart coins and all those things that is recently coming up. It's like you're placing a bet on attention, but it is gambling, 100%. Why it is gambling? It has no underlying value, right? Like that, what you say is true for those, for sure, and you for sure cannot hold them in a bear market, right?
But what is the difference between the underlying value of and this might be very basic for you, but what is the difference between underlying value of, let's say, a Solana versus a any other meme coin, right? What?
Yeah. So Solana is a layer 1 solution, just like Ethereum, etc. What these are I'll explain to you in a very simple way. So these are the platforms you build these decentralized apps on. So so think of Android, right? Like if I am an app maker, I want to make apps, right? I have Android and Apple Store. These are my two places where I can make my app and build my app, code my app, and then sell these. These are my two places. Solana is trying to be that.
Okay.
That's what it is. Okay. So if you buy Ethereum, if you buy these things, Cardano, Polkadot, these are all competing to be Android for dApps. Okay. dApp is a decentralized version of an app. Okay. So everything you have as an app, think of something like Instagram, right? Imagine a decentralized version of that. Think of YouTube, imagine a decentralized version of that, which means it operates on a smart contract. Like I advertise, you make the content, and the money will be transferred automatically. There is no need for a Google, there is no need for a Facebook. Meta, etc. So if you're a person that makes dApps and you think dApps are gonna be the next thing, you are buying stocks of Android basically. That's what buying Solana is. But I believe in this. I believe in this underlying value of solving the middleman problem. Like I genuinely believe in this. So, and in there you're investing in a tech product, right? Like it's like actually investing in anything other than Bitcoin in crypto space, like these big major ones. It's like placing a bet on the technology. Like if you believe AI is the next technology, or if you believe Web 3.0 is the next technology, you place a bet on Solana. Okay, but then be aware of the cycles. That 1
What
year.
part of the overall crypto market does sort of Bitcoin hold?
So Bitcoin dominance was around 60% very recently.
Isn't that like too risky? What if, like, let's say, if Google sort of held 60% of the US market, that would be pretty risky.
Yeah. So that is what I'm saying. That's why when you're investing, you are investing majority of your portfolio should be on Bitcoin.
No, I'm not saying. So let's say that's a portfolio management bit, right? But I'm saying for the market itself, if one company, let's say, holds 60% of the market, isn't that a risky proposition?
No, but Bitcoin doesn't compete with others. Bitcoin is trying to be store of value. Like, so Bitcoin is trying to be the digital gold. Okay. Then you have this Bitcoin don't run on these smart contract applications. It's not a tech product in the sense. It's a store of value. Most of the others, the big ones, etc., are a proposition of, do you believe in the tech? Like, do you believe Web 3.0, decentralized version of everything we have today in digital world? Do you believe in the future of this? Then you get into alts. And they have this symbiotic relationship where in that 3-year cycle, what I told you, Bitcoin will start going up. Okay. Only when Bitcoin reached a very high level, then these others will start firing like crazy. And that is where the end of the bull market is coming. Because then, the alt season, what we call, is where things you never heard of are going 10x, 20x, 30x, 50x. Like, yesterday, Trump coin, for example.
Yeah, that's
500% in one day, right? Like, it's crazy.
Have you invested X%, let's say a lower single digit, but X% of your portfolio in meme coins? Like,
yes, I hold meme coins, but for that, I didn't buy Trump coin because Trump coin is accessible only through DeFi. Like, so I am
technicality.
It's a technicality. I trade on Binance, so I don't have that. But I didn't have the access. But the underlying platform that Trump coin was built on was Solana.
Okay.
And that is the only way you can buy. And Solana went from 160 to 270.
Okay, so you got some of that.
Yes, so I got that exposure, and even in that I exited a little bit early and regretted because it was just a single line of, like, there was no market structure, technical analysis, nothing. It was just
that's the other thing. That's the other thing that scares me.
Yeah.
If you, let's say, compare it with the stock markets. Although even within the stock markets, beyond a point, it's psychology, right? But they still tend to follow certain patterns which are probably, I may be wrong here, but probably a little more predictable than crypto.
Yeah, so this is what I'm saying. All markets follow US. Okay, so there is one main narrative that is always the underlying narrative. Okay, so today that is liquidity. And in view of that, inflation and interest rates, etc. So why does market dump when all the markets, including Nifty, your crypto, everything dumped when Jerome Powell, head of Fed, came out and he said, I am reducing interest rates. I am doing less cuts, right, next year. And everything dumped. Market don't care for inflation. Market care for liquidity. Okay, so at a high interest rate environment, there is low liquidity. And that means for the future of the market, we cannot be, going up because there is not liquidity, right? Like, this is the single narrative. And that is where I was saying, like, it gets so confusing. Like, regular people, most people in India invest in Nifty, right? Yeah. And then they invest in Tata. And then what do? They look at Tata earnings call and they listen to it and they look at the balance sheet, they look at the price to earnings ratio, etc. And when they see something good, okay, new car has launched, and new Tata Power has this new terminal is there, factory is there, and then they invest. But then the market behaves as per the US narrative of liquidity, right? So that is where for me the things have changed. When I cracked that, I was like, oh, it's like they all move in sync and they move as per the global liquidity cycle. Okay. So if you take the time to understand that, then you know when the market is going to be. Like, so for example, this year, I'll tell you, it's the time for all these countries 4 or 5 year cycles of rolling the debt, right? Now we are in an inflationary environment. The US kind of solved it, not really. It's picking up for the past 3 months, but came from 9 to 2%. But the Europe and other places still dealing with inflation, right? But then now the time has come. Now you have to roll the debt, right? So they will be in a position they have to print, right? And what does that mean? Then the markets will go up, right? So once you understand this, then you know, okay. And to me, honestly, that's why I'm saying, I don't go by, is this coin's technology is unbelievable, etc. I have an overall investment thesis where I believe in Web 3.0. I believe Bitcoin as a store of value. These two separate things. And then I look at the technical aspect of the chart. I follow Elliott wave. That is this a healthy chart, first of all? Okay, so I need to see 5 waves up, 3 wave correction, the right Fibonacci level, etc. If that is there, and then I look at the hype around it, and that is where the Trump coin and your fart coin and all those come, right? Like, what happened? Why is 500% in one day? Because inauguration is happening.
Yeah.
And what will happen to Trump coin after inauguration? It will dump like 300%, right? So it's like you are betting on the attention. It's like a way to monetize memes. Okay. So I look at that also. Like, okay, is there enough attention on this project that this thing, what every YouTuber talking about, everybody is shilling this, etc., etc. So, okay, attention is there, chart is healthy, I believe in the overall asset, and the global liquidity is coming. If you have an environment like that, okay, the odds are you're going to make money. Okay. But then if the environment is inflation is back, and then, the Fed has to control the interest rates, and then this, that, then you will have a retraction in the market, right? Like, so this is the overall.
So we've discussed 2 very important topics today, right? We started with AI, and the way we are all very bullish about that, of course. And then there's trading. Now, when I look at, and I recently started learning the basics of trading and all, right? The charts, indicators, all of those things. So now when I think about it, I feel that when AI comes into the picture, all of this technical analysis, all of these charts, like, this will be something that everyone has access to, right? You feed in all of this information into an AI, and you get an output in terms of when to get in.
In fact, AI will trade for you. Not even just the information. AI bots are there.
System-based trading and all of that, right? So then, number one, how would that impact trading as a whole, regardless of the asset class? And number 2, what would still be the differentiating factor between successful and non-successful traders, with AI leveling the playing field to a large extent?
So, like, this is a great question. This is something I think about, like, maybe almost on a daily basis. Okay. And I don't know if anybody has a clear answer to this yet. Like, in the world, I don't think anybody knows this. But, like, what I would say is the markets move on emotion, right? Like, so how does it look? How does the market look when the robots are doing the trading, right? So, like, there is no emotion. So that is the question that I wrestle with. Like, okay, the market is based on panic and greed and fear and FOMO and all those things. Okay. But, like, once the bots are trading and the AI is trading, then after, how does the emotional cycles of the market work? Okay. Is it just becomes very pure technical, that, only projects that make sense, that the analysis are okay, they go up, and other things go down, the human element gets out of it, the emotional element gets out of it? Or it's gonna be even more volatile, and like, we won't now, all the patterns, technical patterns we use, they won't work, etc. So I don't think anybody knows this, and that brings me to the idea that we know AI is going to be big. we know AI is going to probably replace us in our workplace, in many places, right? Like in the coming years, right? So what do you do if you are afraid of the robots, right? Like, so then you have to invest in the robot, right? Like, so if this is AI is going to take my job, right? I wanna be invested in the AI companies till that stock goes up, so that at least I make some money before this happens, right? Like, so this is the idea. So I don't think anybody can tell you how a company would even look like. Like, for example, this I told you, like we are in this debt and liquidity cycle to cover the debt, and that is how the assets go up, and you need to be financially educated to be taking advantage of that. Otherwise, you're just losing out. But then, what is the way out? Because at some point, this debt bubble has to crash, right? But according to me, the way out will be AI, because AI has the potential to increase productivity and consequently GDP to the level that we will never have to make the market crash. They'll keep printing their way out of the problems till the point AI fully comes in. And at that point, you will see GDP growths where like companies' GDPs double, triple in a year, right? Like, because it's going to be infinite workforce with 300 IQ that cost you nothing. So the productivity that you can unleash with that, right, at the company scale, it's going to be insane. So with that logic, I think we are just going to grow out of our problems, which is the best way.
But
right?
let's say 2 years down the line, right, with the way AI is evolving.
Yeah, that is what I'm saying.
If I feed in a question to an AI which is well trained for, let's say, trading, and a lot of people use it and all of that, I feed in a question in terms of when should I get into Bitcoin, it will give the same answer probably to everyone. That could have a huge impact, right? I mean, if all of us are getting the same answer in terms
of... there are trading bots that are available. Even these crypto exchanges, they will lend it to you. Like, you don't even have to know coding or something complicated. You go to Binance, there are trading bots available there that you can utilize, etc., that use AI, etc. So this is not new. This has been there for a while. But so far, where they are good at is when the market is trending sideways. Okay, so those things, because of our jobs, we can't do, which is like day trading, where you sit and buy the low, sell the high, buy the low, sell the high in the minute chart, etc. So those things the bot do well. But the big moves so far, today's scenario, they can't do it. Like, if, for example, what happened to Solana, like yesterday and today, or like, is Bitcoin going up in general or down? Like, should I long the market? Should I short the market? Those things they are not good at. They are good at sideways trading kind of situations. Okay?
Because it's more technical then.
Yeah, but then that is one thing you can do as a practical advice. So when the market reached a certain level, and then we are going to do some, little bit correction, sideways, touch the support, touch the resistance, touch the support, touch the resistance. That's where you enable the bot. And then after, when the big moves happen, you have to be there to, make your investment
that's more psychology
than etc. But the future, like I said, I cannot tell you what will happen in the future. AI will change our lives in ways that, trading would be nothing. Like, I mean, trading would be a very small part of it. But the takeaway for me is, from all this is, like, to give something usable to people is, this very likely will happen. Okay? Trading also will change. Corporation will change. Your job will change. Society will change. Everything will change. Right? So what you need to do before that happens is that this is coming. Maybe the next 4 or 5 years, your only chance to, make some money from the markets where the bots are not trading, humans are still trading, etc. And we are still at the early stages of the AI, right? So make some money along with the robots, right? Like, so that when they come for your job, you're like, okay, I have already at least made some money from this trend, right? That I am not left to dry completely. Right? Like, this is at least what I tell myself that I try to do.
So that's your hedge.
Yeah, that is the hedge. I think that is very important hedge. Like, that next 3-4 years is, maybe the next 5 years is probably the last chance where things you say, the risk you are talking about, is not there, and you get to be early and ride this technology wave, make some money from it, and then after, in an AI world, nobody knows. Like that's how it's going to be.
Okay, I think this is probably like the last thing I want to touch upon, the last section for today.
Yeah.
But so let's say if someone who's watching this is just starting their investment journey, let's say a 25-year-old girl or guy wanting to start to invest today, right? What is your advice? Like, where do I start right now?
Okay. That's a very good question, Shrey. So, and it is a chance for us to summarize what will be said as well. Okay, like the answer to that question is, should I invest? Is yes, you should invest. But then, where to invest? For me, like, humbly, my opinion is tech and crypto is the two things that have enough returns, right? Like that's about 20-30% a year. That makes sense to invest. But then invest in these things, but then after be safe in investing in these things, right? Like how do you be safe? Put money that is you're comfortable losing, because otherwise it will put you in an emotional stage. You will sell the lows, you will buy the highs, you will FOMO in at the green candles, you will sell the red
Let me
candles.
sort of dig a little deeper into this challenge. So let's say, what do you exactly mean by comfortable losing? So I'll give an example, right? Let's say I'm 25 years old. I earn, let's say, 1 lakh a month, and my expenses are, let's say, 50,000 or 60,000. Living in a city like Gurgaon, I live in a shared apartment or whatever, and I have 40,000 to spare. So of course, I won't call it money I want to lose or I'm okay losing. But then, what do I do with that 40,000?
Yeah, I think I think the best is, we talked about cycles, right? Like there is a cyclicality to the market, like be it US, be it crypto, etc. So I think you should wait for that last fourth year of that cycle, which is right now probably be around towards the end of 25, where we will enter a bear market. Okay. And throughout the bear market, DCA into things, which is dollar cost average. What is said is like, you don't look at the market, you don't look at the details. You just keep an eye out, like on the overall financial education, etc. Those things you do for yourself to get even further down the risk curve later dates. But if you are young, I think you can just get away with dollar costing average in the bear market, and then you start selling towards the end of the third year of the bull market, right? Like where things start going really high, you start taking profit. And if you so much as do that, if you put like let's say of the 40,000, put like 20,000 every month, okay, and diversify it into US stocks, Nifty, and then crypto.
Any sort of split you would recommend?
Like I would recommend bulk is US. For me, it's like tech, because AI is the next thing, right? Like, but those companies are already big, so you're not gonna make like 5x, 10x, but still, you should own Google, you should own Microsoft, you should own Amazon, Tesla, etc. So the simplest way to do that is there is this ETF called QQQ. Okay, so this is just the focus on Magnificent 7. So you just hold some QQQ, Invesco, you can buy that in the US stocks. Then you invest some in Nifty, because India is upcoming market. It's a small market size, etc. So when it rises more. And then you do the crypto as well, and stick to the top 3. Okay, so there is a specific season where the altcoins are very attractive, but until that season comes, you should be buying things that will last to the next cycle. With altcoins, you don't know if they are going to last to the next cycle. Now, also please understand that financially, how can I educate myself? Okay, understand this liquidity cycle, start tracking US, understand that everything, including Nifty, crypto, everything moves correlated to the US and the global liquidity of cash flow, right? So this is one thing you need to understand. Don't get lost on the narratives of a single company in the middle of a bear market, etc. Those cases are very unique cases. It's very unlikely you will catch them, right? Like everything moves in a cycle, and that cycle is liquidity. Understand that and start tracking that narrative. And this is what I would recommend.
Right. So just to quickly sort of summarize, you're saying, let's say out of the 40,000, I put, let's say maybe 15K in QQQ or an index fund sort of thing in the US, maybe another 10K in Nifty or top blue chip Indian stocks, and probably the balance
5K go into Bitcoin. Yeah, absolutely. Like that is, I think, if you, and this is without any stress, without any involvement, etc., that you can still make some money, right? And we discussed earlier, sometimes those people make more money than the people that are obsessing over the charts on a daily basis, etc. Right? Yeah, the coffee can idea. I think that's absolutely fair. And should we like summarize everything?
I think what we should get at, and this could be the this could have some closure to it, is maybe the top few actionables that we should look at in terms of investing, trading in general.
Yeah.
As a side
so
hustle.
I would say first is understand how money works. Okay, like try to educate yourself on that. One good way of doing this is this documentary is their Zeitgeist addendum. Okay, so this is freely available on YouTube. The first 40 minutes of that, like you don't have to watch the whole thing, but the first 40 minutes of that is a very simple breakup of how money works. Okay, like how money comes into creation, what is interest, what is debt, how the global policies operate, etc., etc. So that gives you the basics of the large picture, and I think that the big picture is important. I really do. Like some people want to be like, okay, I just want to give me this actionable. This stock is going up or down. Like I get this way. But then you need to understand the full picture. Because that affects your conviction. Like sometimes you buy the stock and then it sells off a little bit. But then if you are convinced in the global liquidity and all the narrative that's playing, what is happening in US, what is Fed doing, then you have that confidence that it will go back up, right? So that is one thing I would recommend. Second, identify investment thesis. Okay, so for example, for me, what do I think in the long term? Right? For me, US will continue to be a very key part of the financial landscape because of the dollar for the next 10 years. I believe AI is going to be world-changing. It's going to change our lives in every aspect, right? And crypto as a store of value, Bitcoin, and the crypto sector is general, the idea of Web 3.0. These are the next 10 years ideas for me, right? Like this is my investment thesis. Okay, so these three for me are key things that I invest in. Okay, then emerging markets, Nifty is something I invest in. So have these investment thesis, okay? Know the cycles and then start buying in the bear market. You don't get into futures. Okay, futures is where you get into trading on debt. Okay, that's where you use leverage, where you're shorting the market. Generally, the advice for a early day investor trader is you just enter at the lower side of the bear market. You ride the bull market. You only go long. You don't short. You don't take leverage, right? Until you're profitable longing the market in a bull market, you don't start taking leverage and start shorting the market in bear market. And what one idea that changed my life, like in investment, was one final thing I'll say was the idea that the market is there forever. Like this is market is there 24/7. Okay, like once this sentence kicked into my brain, the emotion management became so much better. Okay, because like every rise feels like, oh, I missed it, like this was the last, and then every fall is like, oh, now I'm stuck. But like market is there forever, right? 24/7. In crypto, there is not even that the market shuts in the night, etc. 2 in the night, it is available for you to go make money, whatever you want, right? So understand that, okay, you missed this one, you missed this one. Like you'll catch the next one, right? That really changed me, changed my style, because most of the mistakes you make because of that idea of, oh, I missed it. And then you FOMO in the green candle, and then it starts dumping. You're like, oh, I made a mistake. Then you sell there, and then now it really starts going up. Again, you go in, etc. So be smart in the way that you don't put yourself in these positions of like emotional turmoil. Okay, like because it cascades. Like you make one mistake, you exit too early, and then it's keep rising. Now you're in emotional state, right? Like now you are gonna FOMO in. Now it's gonna fall. That's gonna make another mistake and another mistake. So it kind of cascades.
So I think the larger idea I'm sort of getting from you is to try and zoom out, whether it is looking at macros, whether it is understanding the market as a whole, whether it is understanding your own psychology.
Hmm.
So zoom out before you zoom into a particular stock or a
Yeah.
particular coin. So I think great advice, Chalar.
Absolutely.
This I think was a great conversation. I learned a lot.
Thanks, man. Thanks.
I hope the people who watch it
I had great time.
learn as well. Thank you so much.
Thank you. Thank you.
And
Shrey.
all the best in your future investment journey.
Yeah. Thank you. Thank you, brother.
Woo!
Okay. That's a wrap.